Tesla's two new Southwest power purchase agreements give its energy business concrete scale, while vehicle demand shows regional splits. This is Tesla Shorts Time, episode 561. Tesla closed two large power purchase agreements in the American Southwest. The deals expand contracted clean energy supply for its operations and grid services. They add to the company's growing portfolio of utility-scale offtake contracts that support both internal loads and external sales. This activity shows the energy division securing long-term revenue streams independent of vehicle production cycles. Next data point will be commissioning timelines and megawatt volumes disclosed in future project updates. From energy diversification to the latest vehicle production updates at the same Texas site, production of the long-wheelbase Model Y/L is ramping at Gigafactory Texas. The North American version carries distinct build differences from overseas units, including specific component and feature adjustments tied to local manufacturing. These changes reflect supply chain and regulatory tailoring for the U.S. market. The extended platform supports 3 rows while maintaining core Model Y architecture. The long-wheelbase Model Y/L is positioned as a potential station wagon alternative in the EV space. Its extended body adds cargo and passenger capacity while retaining the Model Y's driving dynamics. Production at Gigafactory Texas targets North American buyers seeking more interior room. Early drive impressions of the 2027 Model Y/L highlight its 3-row layout and extended wheelbase. Reviewers note the added space comes with trade-offs in maneuverability compared with the standard Model Y. From new vehicle variants to durability refinements on an existing high-profile model, Tesla implemented further structural reinforcements on the Cybertruck without public announcement. The updates build on the vehicle's existing exoskeleton design aimed at dent, ding, and impact resistance. Internal testing data reportedly guided the changes to meet higher durability targets. Owners may see incremental gains in real-world toughness as these revisions reach production. A controlled crash test pitted a Cybertruck against a Ford F-150. The test examined structural interaction and occupant protection metrics between the two pickups. Results provide comparative data on the Cybertruck's exoskeleton performance in mixed vehicle collisions. From hardware toughness to software development scrutiny, Elon Musk responded to a question about personal use robots by stating Optimus will be epic. The comment aligns with ongoing development at Giga Texas for the humanoid program. It comes as factory construction for dedicated Optimus production cells continues. Volume targets remain set for 2027 and beyond. Observers will watch for prototype demonstrations that move beyond current training footage. From humanoid robotics to competitive pressure in the truck segment, a highway test of the upcoming Rivian R2 compared its charging and range performance against current Tesla models. The results indicate the R2 is narrowing gaps in long-distance travel efficiency. Tesla's supercharger network density remains a benchmark in the evaluation. Rivian reported a revenue beat yet announced reduced capital spending plans. The move reflects tighter cost control amid ongoing production ramp for its R1 and R2 lines. Spending discipline at Rivian could influence pricing pressure in the electric truck space. From rival product progress to residual value signals in the used market, salvage auctions show Tesla vehicles retaining strong residual values even after major collisions. The pattern points to durable battery packs and structural components that remain desirable for parts recovery or repair. High bids suggest insurers and rebuilders see economic value in late-model Teslas beyond total loss thresholds. This outcome contrasts with faster depreciation seen in some legacy ICE vehicles after similar damage. Continued tracking of auction data will reveal whether the trend holds across more model years and crash types. From value retention to regional sales softness, new vehicle registrations for Tesla in Portugal dropped nearly 70% in July compared with prior periods. The decline reflects broader European sales variability amid competitive pressure. Local market data shows Tesla's share shifting while overall EV adoption continues. This regional softness contrasts with stronger performance in other markets. July figures will feed into quarterly delivery reports and regional strategy adjustments. From market variability to autonomy process questions. Multiple outlets continue reporting on a possible Tesla China business sale, even after Elon Musk publicly called the story fake news 3 days earlier. The persistence shows how narrative momentum can outlast direct corporate clarification. Tesla's China operations remain central to its global production and export strategy. From internal process concerns to external narrative persistence, a former Tesla employee detailed alleged safety shortcuts during full self-driving development, including pressure to meet aggressive timelines at the expense of thorough validation. The claims raise questions about internal processes that regulators and courts may examine further. Tesla has not publicly responded to the specific allegations in the filing. The case adds to ongoing scrutiny of how the company balances speed and safety in autonomy work. Hughes Network Systems is filing for bankruptcy after reportedly losing half its customer base to Starlink. The development illustrates the rapid shift in satellite broadband competition. While Starlink operates separately from Tesla, the outcome underscores the execution speed of Musk-led ventures in adjacent sectors. It offers indirect context for how Tesla's own scaling timelines are viewed by investors. A Tesla driver survived a shooting incident at a Twin Falls supercharger, and owners are now requesting an emergency charge port unlock feature. The proposal aims to allow faster departure during security threats at charging sites. Current supercharger hardware and software do not include such a rapid release option. The discussion reflects real-world owner concerns about station safety. Tesla shares posted 3 consecutive gains even as regulators opened a new safety inquiry. The price movement shows investors separating near-term regulatory headlines from longer-term product and energy developments. Trading volume remained moderate during the advance. The pattern suggests sentiment is currently driven more by delivery and energy updates than by the probe. A new Defender-style vehicle is entering the market from Tesla's largest rival, BYD. The model adds to a growing list of look-alike SUVs that borrow the boxy aesthetic. BYD's version targets buyers seeking rugged styling at lower price points. The trend shows how design language popularized by one brand spreads across competitors. Tesla's own body style choices will face similar imitation pressure if the Cybertruck aesthetic gains further traction. There is a challenge worth discussing. Tesla's 2 new power purchase agreements in the Southwest lock in long-term clean energy supply at utility scale. The contracts directly support growing electricity demand from vehicle factories, AI training clusters, and megapack production lines rather than relying solely on grid purchases or renewable energy certificates. This approach converts what would be variable operating costs into predictable, contracted capacity that can be monetized through virtual power plants or excess sales. The structure matters because Tesla's energy margin profile differs from its vehicle business. Megapack and Powerwall deployments already generate higher gross margins than many car sales. Securing dedicated generation behind those assets reduces input price risk and improves the return profile of each installed unit. Rivals without equivalent vertical integration must buy power on spot markets or accept thinner project economics when they attempt similar storage offerings. Over time, the pattern suggests Tesla's energy segment can function as a margin stabilizer even when vehicle deliveries face regional softness. Before we go, tomorrow's reports may clarify commissioning timelines for those new Southwest contracts. And that's everything worth knowing about Tesla today. TSLA closed at $322.23, up $11.02, 3.5%. If the show saves you time, a quick rating on Apple Podcasts or Spotify goes a long way. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. I'll see you tomorrow. This show comes to you from the NARA Network. If you want another sharp daily briefing, Models and Agents has you covered. Your daily briefing on AI models and agents. All our shows are free at naranetwork.com. Prefer reading? Today's full write-up, sources, and transcript are on the episode blog at naranetwork.com. Same briefing, readable format. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.